Today is the day I teach you my #1 trading strategy for beginner Forex traders, known as the trend wave. Now, the trend wave is one of the most powerful trading strategies you can use, and we're going to teach you right here, right now. Okay, so let's take a look at the trend wave. Now, this is regarded as my #1 trading strategy for beginner traders. This really gets you into the game. If you know nothing about currency trading, if this is really your first time and you want to understand, why, if you've never been trained professionally before, that you're placing trades and then all of a sudden you realize you thought the trade was going to go up, it suddenly falls, and then you think it's going to go down and then it goes up. That's because markets move in two things. They move in phases and they move in cycles. So what I'm going to do with you today is I'm going to take you into smart charts. You can see smart charts is literally all around me. I'm engulfed in smart charts. So we have an electronic whiteboard running smart charts in real time that you can see behind me. This is a strategy for beginners. So if you don't understand cyclicity, if you don't understand the phase 1, phase 2 of the currency market, this is going to be really important training for you. So I thought what I would do is start you off with that straight off the bat. So let's go straight into smart charts. If you look top left of the screen, we've got the learn icon. So we click on that and it takes us into the mix, which shows us all of the training modules. Now the training module I really care about this time is decision. So this is where I'm picking the different trading strategies. Now you can see, if you look behind me here, you can see the 180 phase changer. This is the one we're going to look at today. It's the T wave or the trend wave. So just click on that and it brings me straight into the strategy. Now, obviously I'm going to start from the beginning. And I'm going to give you a good rundown so you have a good understanding of what a trend wave strategy is. It works on the phase 1, phase 2 methodology, which means markets, and I want you to think about this, markets don't move up forever and they don't move down forever. Markets move in phases or in cycles. Very much in nature, like animals breathe in and breathe out, markets breathe in and they breathe out. So we call the phase 1 the breathing in and the phase 2 the breathing out. And these give us distinct buy points and they give us distinct sell points when a pattern has established itself. So what you're going to love about this strategy is it uses a very clever price configuration called a low test or a high test. And what that really shows you is after a period of selling, or a phase of selling, there's a quite special indication of a price bar which is exhausted, meaning it's really sold off. And then after the selling has ended, halfway through the bar, you'll see buyers come back in. And that's signified in a particular pattern, which I'm now going to show you. And that therefore shows you that the selling period is over and the imminent buying phase is about to restart. That phase 1 cycle is about to start off again. And that is our buy point. Putting a stop loss underneath that exhaustion area is key. It keeps our risk very low. It also protects us from any downside risk. But what's most importantly, it gets us right in the phase of the cycle at the right point, which means you can enjoy, most importantly, maximum profit upside with as minimal risk. Now, these are the basic tools of some of the best traders in the world. Not understanding phases and cycles is crazy. So this training, if you're a brand new beginner, or even if you're somebody who's been trading maybe for a few years, but you kind of have hit and miss results, this will expose to you why you have hit and miss results. This will show you exactly where the exhaustion is, how to identify when buyers have re-entered the market, and really give you a good entry point. So let's dive into the training right now, and then we're going to go right into the position. We're going to go right into the market today and see what Smart Charts has actually found in terms of trading opportunities which best match the T-wave, or as we know it, the trend wave trading strategy. And then we'll look to get a trade on, see if we can't make some money. Okay, here we go.
Let's start with the basic conditions for a long setup. To identify an uptrend, we would like to see at least one higher high and one higher low cycle on the time frame we are trading. Ideally, we would also like to see this cycle formation form within a higher high and higher low of the time frame above by using multiple time frame analysis. Whilst this part of the analysis is done at your own discretion, Smart Charts identifies the following conditions. For a long setup, the strategy requires the 8-period moving average to be above the 20-period moving average as further confirmation of a bullish trend. there should be a low test bar, which is a bar that rejects the downside push and closes near to where it opened, in the upper half of the bar. The entry price would be 1 pip above the high of the low test bar, with a stop loss 1 pip below the low of the low test bar, and a target level of a 1-to-1 reward to risk. These are the strategy defaults. Your order will be placed as a no expiry order. This means this will stay as a pending trade until you cancel it manually, or the trade is triggered by reaching your entry price. If a new seller's bar goes on to form without triggering the entry level, then we can simply cancel the order as the buying momentum we were forecasting hasn't presented itself. If the new seller's bar formed into another low test bar, it will generate another signal and we can refresh our trade and possibly buy at a better price.
Okay, so we've looked at the trend wave long setup where we can certainly see where we enter, where we place our stop loss, which is 1 pip below that low test bar. That bar signifies that the selling's dried up, new buying pressure has come back in. We want to grab a hold of that if the next bar breaks above it. So now let's have a look at using smart charts to do the scanning work for us. Remember, we can spend all of our time scanning ourselves, but that really is a waste of time for a trader. Our time best spent is analyzing the trades that smart charts shows us and then managing those trades ourselves. So what we now do is we take a look back at the smart chart screen and we click on charts. That's the next icon along from the learning area. And that'll bring up my 4-screen layout. Now, the reason I look at 4 screens simultaneously is I can run different strategies on different screens and I can look at all sorts of things simultaneously. I can also run lots of monitors behind me, which are also looking at other screens. But effectively, you don't really even need more than one monitor to place a trend wave or any of the strategies for that matter. We can split the screen into 4. What I've done in the top left-hand corner is I've left this as a no strategy screen, meaning there's literally no indicators running on it. It is literally a vanilla trading screen. I've done that for a reason. I want to make it really simple for you to understand how we start from the very beginning, how we find a trend wave, how we can put it on, and really keep this as little confusing or as less confusing as possible. Remember this, the confused mind doesn't trade, doesn't make decisions well, and gets kind of caught in a real frozen state of decision making. So let's keep things simple and let's add the layers on top. So if we look at the left hand side of the screen, top left here, I'm going to click this middle icon, which is a square with 2 arrows in opposite directions, which means that's going to expand that screen out as I've now done. It's defaulted to looking at the Australian dollar against the Kiwi dollar. So now we need to find that trend wave strategy, which will run against all of the currencies and, interestingly, all the other asset classes in smart charts by clicking on the top right icon here, which says no strategy. Because right now we are running no strategy. So we click on that and it opens the strategy finder or the strategy scanner. And you'll see fourth column along is the trend wave. Now the currencies which are glowing white are the ones where Smart Charts has done the analytics in the background, has found a number of currencies or indices or other asset classes, perhaps commodities. In this case, you can see there's everything from gold and platinum to some of the major indices. But right at the top, which is where our core focus is, of course, as Forex traders, are the currencies which best match the trend wave strategy. Now I'm going to focus predominantly on long setups. That means buying setups, because that's what you've literally just done some training with me on. So I'm going to look here at the New Zealand dollar against the Swiss franc. I'm going to start there and click on that, and you'll see, of course, it brings the screen up in good detail. Now here's what I want you to really focus on. If we look at the New Zealand dollar against the Swiss franc, we can see the following. We can certainly see the phase 1, the phase 2, the phase 1. Then this here is the phase 2. You'll notice that it does seem to have good interaction with those moving averages. Now, you remember the rules where the yellow period moving average needs to be above the blue. That's the 8 above the 20. Now, the reason that is, just as a quick reminder, is it tells us that we are in an uptrend. If the shorter period moving average, like if we look at the average of price over effectively the last week, 8 periods, against over the last 3 weeks, it means that more recent pricing data is obviously higher, hence why that line is above the yellow line line is above the blue line, that means we're in an uptrend. That's our signal, or that is our clearly defined way of telling us we are in an uptrend. So obviously we're looking to buy in an uptrend, but only after the market's topped out and has fallen a little bit. Looking at the screen, we can see, look, this is the market topping out here. It's now fallen back here. And this area here where there's a blue arrow indicated tells us this is exactly where we should be looking to place our trend wave. Now, if I change my arrow to my grab tool, which means I can grab the screen down, I can now extend it a little bit to really focus on this. You can see this in much better, much clearer detail. We can see here's the arrow. So the arrow says this is the bar. Now, if the stop loss would be on the red spot, the entry will be on the blue spot, and of course the green spot is the take profit. So where the current price is right now is where this line is. So when this line crosses where this blue spot is, which would be the entry price, the stop loss is 1 pip below this low of the previous bar, which is here. Would place the bar here, and then we'd look to take the profit here. Now, I like this trade for a number of reasons. First of all, if I was to look at the average true range, which is how much this market is moving around, this is well inside the average true range over the last 10 periods. That's really important. That means that the probability of this trade stopping out is reduced. It means that the potential of it hitting its profit target is strong. This market has traded all in this area before. So what we're really doing is we're nipping in, we're grabbing as this market's now sold off in its phase 2 and it's now resuming. You can see this low test. If you look at this low test here, you've got the open here. The market fell down here. Now the market's closed up here. This tail or this low test is a fantastic indicator that this selling from this phase 2 movement is now over, and we're now looking to resume back into that phase 1 where we now move the market back up for another higher high. So this is that wonderful pinnacle time. It's also important to notice that the stop would go just underneath that 20-period moving average. That does give it some protection from some downside risk. You can notice that the market has bounced off that stop loss previously. We're entering here, which we'll see what the pricing is. I don't even need to guess what the pricing is. This is the magic of smart charts, and here it really comes. All I need now do, and for you as a beginner, this is where it gets quite exciting. Because you know the system's done the analytics for you. You know the system has looked at all the currency pairs which are moving in all different directions simultaneously and has found the ones that match this criteria or this strategy criteria the closest. It's bubble sorted them to the top of the list. And then if you're still confused, you'll notice there's a red button which indicates selling or going short. There's a green button which indicates going long. You'll notice if you look closely, the one that is glowing on and off is the green button, which effectively tells you should be looking to go long on the Kiwi dollar against the Swiss francs. That's the NZD/CHF. That's the New Zealand dollar against the Swiss franc. So simply, by clicking on that green button, you'll then notice the right-hand side of the screen now changes. And this gives us a trade ticket. And that trade ticket says you're looking at the trend wave. We can change our risk, so we can do pounds per point, lot size or cash amount. It's one of the beauties of Smart Charts version 2, which we are looking at right now. It allows us to risk in a variety of different ways. We can risk by the amount of money we place on the trade. We can risk by a percentage or a lot size or a cash amount. That's really clever. So some of us who just like to use a cash amount, some of us like to use lot size, and some of us just like to keep it to percentage risk. So in this instance, I'm going to change the percentage here to 2% risk, which means that I'm not going to risk any more than 2% of my trading account. If I look at my take profit, so if I now move over to the chart, you'll see if I click on any of these, I can move these up or down. So it said on that green spot, it tells me straight away I'm going to make 30 pips. If I enter here on the green line, which would be my buy entry, I would make 30 pips, which would give me a profit of 5,833. That's a nice profit. It's inside this range of price movement, so the probability is pretty good. You can see we've had low tests here, so the market is reacting off the end of that phase 2. It wants to move higher. My stop loss, of course, is 30 pips below, so that would take me a loss of about 5,900. So it's a 1-to-1 reward risk, meaning I'm risking the same amount, about 30 pips, to make 30 pips. Obviously, the edge is the strategy, which is it's the end of phase 2, and you can see buyers have already started moving back into the market. In fact, you can probably see this red bar just flick to green, so the buying pressure is coming back in. Now, we won't enter this position until the closing price or the latest price of this bar has crossed through this green line, which is indicative of this blue spot, which is the buy entry. So knowing that we're entering at 0.6496 would be our buy entry. Our stop loss is 0.6439, which means the system has already calculated where I need to enter, where I need to place my stop loss, where I need to take my profit target. All I really need to do now is I can use my professional trading skill to tell me, do I need to make any amendments to this trade? And I really don't need to make any amendments to this. This is pretty vanilla. It's pretty much straight off the bat. I just need to hit the green button now. It says, do you wish to use reduced risk? I do. So I hit confirm. And that position is now effectively on. We haven't entered the trade. That's an important distinction to be aware of. It's not live in the market right now. Interestingly, if you look at the screen, that bar has just moved into green, which means that the buying pressure is coming in. So already I'm catching this just as the buying pressure is moving. And I'm only trying to make 30 pips, but it'll make me £5,000. So it's worth it as a trade. So that is pretty much how the trend wave works. We've placed the trade. The system is now managing that position. So if I go to my trades screen and I can look at pending, that T-wave strategy is in my pending screen. If I click on that, it says, look, it's on the daily time frame. It's Kiwi, New Zealand dollar against Swiss franc. It's a buy stop. It shows me my entry price. It shows me my stop loss, shows me my take profit. I can cancel this trade if I want. I'm not going to do that. Obviously, I'm going to let this position run. It is in the system. It meets the criteria perfectly. We are literally 4 or 5 points away from entering the position. When we're entered, we are long, and the position will be managed by smart charts until it takes profit on that blue line. Okay, so that's the trend wave strategy. If you enjoyed this video, don't forget to hit the like button. If you haven't subscribed already, make sure you do that, and I look forward to seeing you in the next video.